Hi guys, welcome back to High Yield Intraday Trading. A very happy new year to all of you. I hope everyone is doing good. So the topic that we are going to discuss today is about gaps. So every one of us hear these terms all the time in the market, right? The market or a particular script, open gap up or open gap down and stuff like that. Now the thing to note here is gap in itself is a generic word. Below it there are many more things that needs to be known, which we will discuss in this video. Okay, so first thing first, let me quickly go ahead and discuss about gap ups and gap downs, and then we will take it up. Okay, so we say it's a gap up if a stock opens higher than its previous day's close, and we say it's a gap down if the stock opens lower than its previous day's close. As simple as that, right? Now let's go ahead and discuss the various gap types that are known in the stock market and what do they exactly indicate when they are formed. Okay, also please note that I will not be telling anything about how to trade the gaps, but it would be into pure technicals which cannot be covered over here because it's huge. Okay, but surely I will give some points that you can practice or observe when you do your further studies on the gap analysis. Okay, another thing to note here is it's more helpful to swing or positional traders. Okay, as these gaps are stronger in the higher time frame, and when I say higher time frame, I mean the 1 day time frame or the 1 week time frame. Okay, please do not use the things that we are going to discuss for intraday trading. Okay, intraday trading is completely different, and you need to know the very minute details about the moves in order to anticipate the right things. Okay, so not to be used in intraday trading. Okay, only to be used in swing trading and positional trading. Okay, so coming back to the type of gaps, there are 3 known gap types. First is runaway gap, second is breakaway gap, and the third one is exhaust gap. Okay, let me cover it one after the other. Coming on to the runaway gap. Okay, so let's take the example of Nifty. Let's say that Nifty is in an uptrend, and while Nifty is in the uptrend, if we see that there are gap ups being formed, that means that the buyers or the bulls are aggressive. So normally we see these gaps in intervals. It may be that the gap ups are being created every couple of days, like 2 days or 5 days or 7 days. It might be even 15 days or even after 20 days. Okay, but there is no specific number of days after which the gap ups would be seen. Okay, it's absolutely random, and if we see a gap up being formed when Nifty is in an uptrend, then it gives an absolute indication that the aggressiveness is being created by the bulls, and Nifty is in all the mood to move up further. Okay, now the same holds true if Nifty or any stock is in a downtrend. Okay, and in downtrend you should be looking out for the gap downs. Okay, hope this is clear. Now coming on to the breakaway gap. Now let's say that a stock is sitting at a particular support or a resistance level. Okay, to be more specific, let's say that a stock is sitting at a resistance level wherein it is facing a good resistance at that particular level and is unable to breach that level in the upward direction and move up. Now since it is facing a resistance, it starts moving down. And when it is moving down, if you see a gap down being created, then that is called as a breakaway gap. Okay, now why the gap down was created? Obviously because the sellers or the bears were aggressive and a supply zone was created at that point. Hence the stock has further chances to move down. Okay, many of the times it is also a hint of the change of the trend as well. Okay, also have an eye on the volume spike. If you see the volume is big, then more is the surety. Okay, so the same thing holds good when you see a stock is sitting at a particular support level as well. Hope that is clear. Okay, now moving on to the third type, that is the exhaust gap. In order to explain this, let's say that Nifty is in an uptrend. So we all know that nothing can keep moving up forever. It has to come down at some point, right? Now that coming down of the stock might be a retracement or it might be a trend reversal as well. But we will not discuss this here. It's again a big topic which cannot fall into the scope of this video. So what I was saying was, yeah, the stock or Nifty is in an uptrend, and at some point it gave a gap up. Okay, if you remember, I told you in runaway gap that forming of these gap ups gives us a hint that Nifty is in all the mood to move up further. But the thing which is different here in exhaust gap is this gap up which has been created or which has been formed will be closed in a couple of days. Okay, so when you see such gap ups getting filled up in a couple of days, you can very well anticipate that the trend is changing from an uptrend to a downtrend. Okay, so this was about the theoretical portion of it. Let's move on to the charts so that you are more clearer on that. So this is the Nifty cash 1-day chart. Okay, and the yellow lines that you see here are the gap ups which has been drawn by me. Okay, so right from this point we can very well say that Nifty was in an uptrend because it was forming higher highs and higher lows, right? And when Nifty was in an uptrend, we see so many gap ups being filled. Sorry, I'm so sorry. We see so many gap ups are being created. Okay, so these gap ups were created because of the bulls, because the bulls were aggressive. The bulls wanted Nifty to be going up further. Okay, that was the reason why these gap ups were created. Okay, so this entire scenario is called as the runaway gap scenario. Okay, wherein a particular stock or maybe Nifty is in an uptrend, and while that particular stock or Nifty is in an uptrend, we see various gap ups being formed after a couple of days. Okay, now here you see that the gap up was formed after 2 days, but here you see that the gap up has been formed after 6 to 7 days. Similarly, here you can see it has been created almost after 15 to 20 days. Okay, so as I said earlier, there is no specific day limit as to when the gap up will be formed, but what's important is when a particular stock is in an uptrend, we should be seeing some gap ups being formed after every couple of days. Okay, so this scenario is called as the runaway gap scenario. Second one is the breakaway gap. Okay, in order to explain breakaway gap, I have a good example of Indigo here. So again, this is the 1-day chart of Indigo. The yellow line that you see here is acting as a clear resistance, right? You can see here it has been tested 5 to 6 to 7 times, but this point approximately it is 1516. Okay, at 1516 it was not able to breach that particular price point and move up further. So clearly Indigo was facing a resistance here, right? So it started moving down. Okay, and when it was moving down, it gave a gap down. This scenario is called as a breakaway gap, and since then it started falling, so it was a trend reversal. Okay, so as I said earlier, breakaway gaps can give you a good hint of trend reversals as well. Okay, so this entire scenario is the breakaway gap scenario. Okay, now moving on to the third one, that is the exhaust gap. We have got the example in Nifty itself. Let me make it a bit bigger so that it's more clearer. Okay, so Nifty was in an uptrend. Okay, and the last gap up that was formed was here, right? This was a gap up opening, and exactly after 2 days this gap up was covered. This gap up was filled up. It was filled by this red candle, right? Yeah, it was filled by this red candle. So this is the perfect scenario of the exhaust gap. Okay, so wherein a particular script or Nifty might be in an uptrend, okay, and while being in the uptrend it gives you gap ups. Okay, and this was the last gap up which was given by Nifty. Okay, because exactly after 2 days this gap up opening was filled up. This gap was filled by this red candle, and since then it started falling. Okay, that is why it is called as an exhaust gap. Okay, now in this scenario the last gap up was filled exactly in 2 days, but it is not the case all the time. It might take 5 days, it might take 10 days, even it might take more than 15-20 days, but ultimately what is important is that this particular gap up has to be closed. Okay, so that, and we can start anticipating that okay, this up move has exhausted and now it is the time for a down move. Okay, so hope that is clear, guys. I hope I was able to explain all the all the things about the various type of gaps and gap as a whole to you guys. Okay, I hope you got the point. So I hope it helps. And that's it from my end, guys. And just to repeat, do not use this in intraday trading. The previously explained things are good for swing trading and positional trading only. Okay, so keep learning, keep practicing, and keep implementing the right things to be a good trader. Okay, and as always, would request you all to like and subscribe to my YouTube channel, and also please join in my Telegram channel, the link to which you will find in the description section. And I will see you all later. Hope you all will stick back. Happy trading. Bye bye.